Imagine logging into your health or car insurance account and realizing a computer, not a human, has quietly changed your premium. Or picture getting denied coverage because an algorithm spotted something in your data you didn't even know existed. This is no longer sci-fi. From the USA to Europe, AI is now writing policies, setting prices, and even paying out claims, all in the name of speed and fairness. But is it fair? Or are we giving up privacy and control for a cheaper bill? Today, we'll unpack the truth about AI-generated insurance policy, how they really work, why they're booming, and the hidden risks that might affect you more than you think. What exactly is an AI-generated insurance policy? Let's start with the basics. An AI-generated insurance policy means that some or all parts of your coverage, from pricing to risk assessment, are decided or updated by artificial intelligence. This doesn't mean a robot writes the entire contract from scratch. Instead, AI tools crunch massive amounts of data, your driving habits, medical history, location, and even things like your social media activity or fitness tracker stats. The AI then calculates how likely you are to file a claim and adjusts your premium, sometimes in real time. Why insurance companies love AI? So much insurance companies love AI for three big reasons. First, it's efficient. Algorithms can process thousands of customer files in seconds, saving money on human underwriters. Second, it's more personalized. AI can price risk for you specifically, not just the average person in your age group or zip code. Third, it fights fraud. Advanced AI models spot suspicious claims that slip through human eyes. In a world where insurance fraud costs billions every year, that's a big win for the companies, and supposedly for honest customers too. Where AI-generated policies are already here, you might be surprised to know you could already be covered by an AI-generated policy. Car insurance startups like Root Insurance or Metromile use telematics, real-time driving data, to let AI update your premium each month based on how safely you drive. Health insurance companies like Oscar Health or Vitality use wearable data to reward healthy behavior. Their algorithms track your steps, sleep, and heart rate to decide if you get discounts. Even home insurance firms like Hippo use AI tools to monitor connected devices like leak sensors or smart thermostats, adjusting risk levels in real time. How AI builds your risk profile. So how does an AI decide what kind of risk you are? It uses a mix of obvious and surprising data. For cars, it might track how you drive, when you drive, and where you park. For health, it can look at age, weight, or medical history. But some companies are going even further. There are tests with AIs that analyze your social media posts, shopping habits, or even the way you fill out online forms. Each little clue helps them predict if you're more likely to file a claim or even commit fraud. The problem is, these tiny pieces of data can add up to a big impact on your costs. A change in your lifestyle, like a new job or a late-night pizza habit, could quietly make you look riskier in the eyes of an algorithm. The promise? A fairer, cheaper system? Supporters say AI-generated policies fix old unfair practices. For example, two people who live in the same area might pay very different premiums if the AI sees that one drives carefully at 9 a.m. while the other speeds around at 2 a.m. In health insurance, AI can reward people who exercise or eat well. And for home insurance, smart sensors can catch leaks or fires early, saving everyone money. In theory, it sounds great. Pay for your real risk, not other people's. The hidden risk, bias, and black boxes. But here's the catch. AI is only as fair as the data it's fed. If biased data goes in, biased decisions come out. For example, studies show some AI risk models might penalize people in certain neighborhoods or job categories unfairly, even if they have a good record. There's also the risk of black box decisions. Many AI models can't explain exactly why they made a certain choice. How much data do they really collect? Another big worry is privacy. Insurers claim your data is secure, but the more they collect, from GPS trackers to fitness apps, the bigger the risk if that data leaks or gets hacked. Plus, do you really want your insurance company to know when you order fast food late at night or how many hours you sleep? Some people feel it's a slippery slope to constant surveillance. Can regulators keep up? Regulators in the US, UK, and EU are scrambling to keep up. In Europe, the AI Act aims to control how companies use personal data and make AI decisions more transparent. But insurance is tricky. How do you make a complex AI model explainable? How do you guarantee it's not discriminating? Experts say more laws will come, but for now, many AI-generated policies run on trust or blind faith. The big names behind the AI push it's not just startup. Giants like Progressive, Allianz, and AXA are investing billions in AI tools for underwriting and claims. They're partnering with tech firms like Tractable, which uses computer vision to see car damage, or Shift Technology, which scans millions of claims to catch fraud. So whether you choose a big name or a trendy app, AI is becoming part of your insurance whether you notice it or not. Will humans still matter in the future? One big question: where do humans fit in? Supporters argue AI frees up agents to handle more complex cases with empathy. Critics worry we'll lose human judgment when we need it most. Imagine a family denied flood insurance after a rare storm. Will a bot really understand your unique situation? The numbers behind the AI takeover, according to McKinsey, AI could automate up to 50% of claims processing in the next decade, saving companies billions. A recent Deloitte report says over 75% of insurers now use AI for at least one part of their business, and that number keeps rising. What it means for you, pros and cons. So, what's the takeaway for you? On the plus side, AI-generated policies could mean faster claims, fewer paperwork headaches, and prices that actually match your real risk level. But the downside is real too. Privacy trade-offs, black box decisions you can't question, and the possibility of unfair bias that you'll never see coming. It's a future where your life becomes data, and your data decides your safety net. Smart tips to protect yourself if you have an AI-powered policy or plan to get one. Here's how to stay smart. Always read the fine print about what data they collect. Ask if there's a clear appeals process if you disagree with an AI decision. Keep your eyes open for how they share your data, especially with third parties. And remember, just because a discount sounds good doesn't mean the trade-off is worth it. Like all technology, AI in insurance can be amazing, or it can quietly stack the odds against you. What's next? A fully AI insurance world? Experts say AI-generated insurance is just getting started. Next up, real-time dynamic pricing. Your premium could adjust daily as you drive, shop, or sleep. Or smart contracts that auto-approve claims with zero paperwork. Some futurists even talk about decentralized insurance, using blockchain and AI to let groups self-insure without big corporations at all. Call to action: would you trust a robot with your most important protection? Or do you still want a human touch when it matters most? Let us know what you think in the comments below. Are you excited or worried about this future? And if you found this breakdown helpful, don't forget to hit the like button, subscribe for more deep dives, and share this video with someone who needs to see what's really happening behind the scenes. Stay curious, stay informed, and remember, your data is your power.